What's good, everybody? It's gonna come back at you on a video. So this video I want to do a trade recap for this past Friday, March 28th. So this was a trade I took on the NAS100. It resulted in a loss, and we're going to go through it with a brief trade recap. So for this day, we had news at 8:30. Not really that big a deal. Um, and on this day, so you're seeing this what happened on the daily time frame right now. I know you see. Sorry, excuse me. I know you see this long bearish candle right here. Just imagine this entire candle didn't print right because this is obviously a daily candle for the entire day of Friday. So prior to this move right here, um, I'm still bullish. My directional bias, daily bias, right, high time frame bias, still bullish. Why? Because you see here that there's a big gap between this Friday candle and this Monday candle, and so this is a volume imbalance, and so this pretty much serves as a fair value gap or an actual imbalance. And as you can see from Thursday's candle the day before, price respected it. So I'm expecting, instead of price going all the way down like this and eventually breaking structure, right, I was expecting price to essentially reject this volume imbalance and push higher, right, to continue the daily buys. Obviously that didn't happen, but we'll jump into it. So I'm not here to waste you guys time because um, at the end of the day it resulted in a loss. So I'm basically just going to explain my thought process and why I think it didn't pan out, right? So here are my markings, right? So as you guys know, we would plop the vertical line right here at 8:30, right? Make sure we'd have New York set as our time. And here at 8:30, we set the vertical bar, we look left. Since at the time I was still bullish, right? I wanted to mark out sell side liquidity prior, like the most obvious swing low prior to 8:30 because I wanted sell side to get taken and push higher, which is this red line right here. So that was our sell side liquidity. As you can see, price came down after 8:30 and purged it, which is fine. But these were the different targets I was looking at, right? Clearly, you can see a high right here, you see another high right here, you see an imbalance here, obviously another imbalance that you can see right here, right, and another high. So you see that we had obvious upside targets. Now if I jump down lower to the 5 minute time frame, right, you see high, high, mini high, but this is like the major high, another major high, right? So we have upside targets, which is always a great sign. So now jumping in on the 5 minute time frame, we marked out our sell side liquidity here prior to 8:30, and we see price purchase, and that's fine because since at the time I was bullish, I want to see price essentially make the low of the session after 9:30 to then reverse and then go higher. So that's what I'm looking at, right? So this eyeball here is just signaling that sell side liquidity got taken, but as you can see, price continues pushing lower. Um, and here we make a push up. So normally I'm not the biggest fans of like price going going up. Like if we're bullish, I don't necessarily want to see price go up and clear some targets, right? As you can see, um you know, this intermediate high got taken, but the major high is still intact, so I'm not really too worried. Like sometimes price does that to leave like a double top, right? So it's still prior to 9:30, so I usually just wait till 9:30 to see what happens. So boom, right? This long candle right here, this is the 9:30 candle. So as you can see, this candle right here pushes all the way down and effectively clears the low. So after 9:30 with this candle, it did in fact make the low of the session. So pretty much all of my confirmations are met for a legitimate setup potentially presenting itself. And so now at this point, what I'm looking for is basically an aggressive 5 minute candle that's bullish, right? Because if we see an aggressive 5 minute candle that's bullish, then that is a sign that price may want to go higher. So then we'll drop to lower time frames and see if we see any break of structures to the upside. So just here on the 5 minute time frame, just waiting, and then boom, we see an aggressive 5 minute candle. Obviously has a lot of momentum. So now we'll start dropping into lower time frame to see what we see, right? So right now we don't need, the last structure point is up here, which is not ideal because if price came up to break structure here, it'll likely clear this high. And we don't necessarily want targets to get taken out on the breaks of structure, right? We want to have a break of structure and then be in price so that when it goes after the targets, we'll already be in the trade. So we're not really seeing anything here, right? 3 minute time frame. This is the last structure point, so still not ideal. So on the 2 minute, when I drive down to 2 minute, this is when I noticed something, right? I noticed here we obviously have a volume imbalance. I'll extend that out for you guys if it lets me, right? As you guys can see right there, there's an imbalance in volume, right? So I noticed that, but more importantly, I noticed that this was a structure point right here, right? Because as you can see, this candle is higher to the candle to the left and the candle to the right of it. And clear as day, right? These candles right here traded through this high, so it's technically a break of structure. And now what I like to do, I like to see structure breaks on two different time frames. So 2 minute time frame, we had a structure point that was broken here on the 1 minute time frame. As you can see, this candle is also a swing high here. So we had a push down right after 9:30. Price made the low of the session, which is great. Then price reversed and cleared out this swing high, breaking structure to the upside. Now the next confirmation is from the displacement high, which is here, to the displacement low, which is the low of the last leg of price before break of structure. This is the displacement range. Now, do we see a gap within this range, right? And of course, there's a tiny gap right here. So this is the gap I see on 2 minute time frame. I mean on the 1 minute time frame. 2 minute time frame there wasn't anything, but this was the gap I see now. Of course, this is a smaller gap. Usually, in a perfect world, you would want to see price deliver a stronger fair value gap. That's just me personally from like trading this pair. But nonetheless, price did technically fit my confirmations of delivering a break of structure to the upside, right? This structure point right here um, was broken on the 2 minute and the 1 minute time frame. So um, we had structure broken on multiple time frames, and then we sorry, have a fair value gap that's within the displacement range from the displacement high to the displacement low. Now, it would be great if the charts didn't freeze. Sorry about the technical difficulties over here. Okay, well, we'll just go right back to it. All right, no big deal. So here we go. Okay, well, great, perfect. Thank you for loading. Um, right, so technically fit our confirmation. So at this point, I'm basically looking at price to do this, right? And it still hasn't fully loaded because this indicator that I use for the sessions still didn't show. But anyways, okay, now we're showing, right? So now this is what I'm looking at. Um, this is pretty much the trade setup I'm looking at, and I have my final target all the way up here. Right, so because this was a trade on the NAS and I'm still trading a small account size, I don't have like a large size to, you know, be able to, take partials as perfectly as I would like, right? Because I'm trading essentially like super tiny positions. So in this case, I basically have my final target here for like about a 1 to almost 3 risk to reward. So that's pretty much the trade that I was looking at. But as you guys know, I did in fact take a loss. So you see a price pushed up, it continued pushing up, cool. For me, this trade would have been invalid in my eyes if price had come up here and cleared out, this high and this high, because then that's essentially a double top or quote unquote resistance that got cleared. But price didn't. As you can see, price came into the fair value gap, tapped it, rejected it, which I thought was a great sign, right? You see price actually reacting to this, but then, fast forward and then boom, I got taken out. So of course, because that happened, I was actively seeking re-entry if price delivered that to me, right? So I went to the 5 minute time frame and I was seeing if price was ever gonna give me another bullish candle, which it essentially didn't. But the interesting part about it is that this aggressive push down, right? If I go back to the daily time frame, this aggressive push down is what blasted us through this swing low. So this candle right here, you see the candle to the left and candle to the right. This swing low right here, price came down and blasted through, which was a signal to me that price essentially went to being bearish. So this was like a little bullish run that price went on for like a week or two, a couple days. and then now price blasted through, so it's bearish. So that's the thing. Of course, I did technically take a loss on this day. Um, so it is what it is. But of course, you don't want to concern yourself as a trader. You just want to learn and see if there's anything you could have done better. Now, in a perfect world, uh, I would have liked to. So I took this trade with full risk. I probably should have went in with half risk just for the simple fact of the fair value gap being so tiny. Just because I've noticed in price that if a fair value gap, I think the fair value gap is a fair value gap, right? Because you can see your price came down and rejected it. But um, generally, you want to see larger fair value gaps, right? Like something like this, for example, we clear this off, right? Like this is a much better and more noticeable fair value gap, right? And like the bigger the fair value gap is, the more likely it is to hold compared to a smaller gap. So even though this trade technically for confirmations, if I could go back in hindsight, I would essentially either disregard this trade because of how tiny the gap is, or if I would trade it, I would have just traded it with half risk, right? Because um, of just how small the gap is, right? If price had given me a gap of this size, then that would have been a lot better and would have, done a better job justifying me going full risk. But a loss is a loss. It's okay. Because this strategy I know has a high win rate, is successful, right? Because it's trading in alignment with the logic of the marketplace. Um, so that's that. But that's just a recap. But we still got valuable insight because although we lost this trade, now we know that price on the daily, right? The daily bias is now bearish, right? The directional bias is bearish, so price wants to keep delivering lower prices. So that was valuable insight. So we took a monetary loss on our account, sure, obviously, but now you need to remember that we've now shifted from bullish to bearish. So now, you know, from the upcoming weeks onward, right, unless price gives me a reason to change the bias, right, I'm now bearish. So I'm only looking to take sells, right, to take price lower. So that's the trade recap for Friday, March 28th. Small loss, but it's okay. We essentially follow our strategy, and it's just that trade didn't pan out, and that's okay. There's always something we can learn from, and in the future, right? Probably in a case like that, either just going with half risk or just avoiding this entirely because this is actually, a pretty aggressive leg up, and this wasn't even like an obvious fair value gap, right? This is like a fair value gap where you kind of have to like do a double take to make sure you see that that is actually a gap in the marketplace, right? So, um, you want to make sure you can sift it. Like as a trader, right, obviously you want to be as mechanical as possible with your strategy, but there's times where you can, you know, there's going to be some gray area and some decision for you to make as a trader. And, in a case like that, you could have, I, speaking for myself, I could have either just went in half risk or just avoided the trade entirely just because of the gap being too tiny. Like if price actually wanted to go in the direction like in my favor, then I think price would have delivered a more convincing fair value gap. And so me personally, I probably should have just like allowed the like just stepped away and just you know let price do his thing to see if it was going to give me something more convincing, right? You want to make sure like it delivers a convincing fair value gap basically, but nonetheless, loss is loss. But still learning lesson. So that wraps up the video. If you enjoyed the video, do like and subscribe. Um, show well, and I'm out. See you guys for the next one.